All right, the conversation this week is if you play one game as an athlete in California, your total income can be taxed.
Now, you got this from a listener, right?
A listener wrote in this week. It's actually the listener that wrestled the bear. So if you go back and listen to the wrestling episode about the bear, that's the listener that wrote this in. So he gave us a topic.
Yeah. Does he live in North Carolina?
He does.
And did he wrestle the bear in California? And that's how he knows this.
That's right. He had a jock tax imposed when he wrestled the bear in Greensboro.
But you just mentioned the phrase, the jock tax.
The jock tax.
And that's what this is.
Yes.
Tell us a little more about it.
All right. So the jock tax in California, at least, is if you're an athlete that comes into California, and from the time you step in the state till the time you leave, so all the media, pregame, game, they can tax you for that time based on your total salary.
So if you're in there for a week,
right,
that is 1/52nd of your year,
right, of your total salary. So if you're making millions of dollars, they're going to tax you on that millions of dollars. They're not going to tax you.
Are they going to tax you on the entire year's worth of salary, or just the
1/52nd? 1/52nd of your total.
So if I make $52 million, they're going to tax me on $1 million while I'm there. Oh my gosh.
Okay. Now, again, this isn't unusual for our podcast. I'm getting ready. One, I don't know anything about athletics. And two, I don't know much about the jock tax.
No, but we do know something about taxes.
We do.
Because that's something that doesn't change.
Yeah. And sometimes it doesn't sound right. So supposedly Sam Darnold, who was the quarterback for the Seahawks in the Super Bowl this year,
right,
he won a certain amount of money, like several $100,000 for being on the winning team.
Yeah, right.
But the taxes that he got imposed by California exceeded what he technically made for the game. So this has kind of made headlines recently in the sports world, I guess, is that he actually lost money technically by playing in the Super Bowl.
So basically, again, going back to the example, he makes $52 million, was there for a week, got taxed on $1 million.
Right.
Let's say that's 10%.
Yeah.
And so that's $100,000 tax.
Right.
And if his bonus for winning the Super Bowl was only $50,000, he's out $50,000.
Yes, I think
I'm sure the numbers are much different, but that's what you're saying.
No, that's pretty close. Yeah. Yeah. So that's a tax I think you would not be expecting if you went into a state. Now, I'm not a jock. I don't play for an NFL team, but
you are a high earner.
That seems a little unexpected to go and win and then actually end up owing money for playing the game.
But what's worse
he'll be fine, I'm sure.
He'll be fine. But what's worse is if you're the loser, you're still going to get taxed. And you didn't win the bonus.
You didn't win the bonus, or you got less for playing in the Super Bowl.
Right.
And if you're a high earner, you're going to be taxed for the time you were in the state.
All those football players have that.
Yeah.
Will have that issue.
Yeah. So they especially honed in on the quarterback, but it could potentially be for anybody. Right.
Man, how does that seem fair?
Well, fair is relative, right? About what's fair and not fair. So I'll give you an instance.
Does this seem fair to you?
Well, I'll give you an instance from my career.
Okay.
Now, obviously, I'm not a quarterback. So as most people know on the podcast, I'm a pharmacist.
Right.
And at a previous employer, I had to be licensed in several states. Now, if you're not familiar with pharmacy privilege licensing, a pharmacist has to be licensed in each state that he practices. There's no national pharmacist license that allows you to go from state to state.
You need a specific license to practice medicine in a state, practice law, or even teach. You need a teacher's license.
Teacher's license, nursing.
Right.
And so there's these licensing boards. There's a licensing board for barbers. You have to have a license to be a barber.
If you want to be a professional engineer or an electrician, you got boards there for every state.
Right. Okay. You have boards for the state, and they charge you money, sometimes a lot of money, to hold a license in that state to practice.
Right.
Okay.
Right.
So I had to be licensed in multiple states. So it was.
Well, let me ask you that. Why did you have to get licensed in multiple states?
I was practicing in several states.
You're actually practicing. So you're in that state writing prescriptions, or?
I was going to be consulting in the state, and so I had to have a license to do that.
To consult. Yeah. Okay. All right.
So I'd got my Virginia license, my South Carolina license. My home license is North Carolina. So now I was getting ready to get my Tennessee license.
Okay.
So I had to go to Nashville because
Uh-huh.
the board made you actually stand before the board.
Really?
Yeah, and so I went and got my license, was ready to go.
Yeah.
And it turned out my job changed, so I wasn't going to have to end up practicing in Tennessee.
Okay.
Okay.
All right. Right.
So I had the license.
Right.
I could go into Tennessee and practice, but my job changed and I wasn't going to actually have to do that.
All right.
But everything's paid. I'm licensed. Out of the blue, with no warning, nobody had warned me about this. Tennessee levies a $500 professional use tax.
Really?
Yeah.
On top of the fee you paid to get licensed.
Yeah.
And what's that? What's the use tax? What it just?
Well, it's just a tax for the privilege of being a pharmacist in Tennessee.
Really? And the license didn't cover that.
No.
Wouldn't you have thought the license covered that?
You would think the license would have covered that.
Like when you renew your registration for your car, you pay the tax.
Right.
Right. You do it
now,
all.
You have to remember,
you do it all at once.
This was 30 years ago.
Oh, okay.
So they may not have been that sophisticated.
Yeah, but it's probably still happening.
Right. But they levied this tax, and I was not, I was a younger pharmacist.
No.
I wasn't prepared to pay $500
Yeah.
just for the privilege of holding a license that I wasn't going to use.
Yeah.
That was going to generate no income.
So what did you do?
I didn't practice, but in order to not pay the tax, I had to inactivate immediately. Turn around and deactivate my license. Yeah, which seems silly because I just got it.
So we were talking about, does it seem fair? Maybe
Right.
change the question. Does that seem reasonable? Does it seem reasonable to go into a state, earn some money, a little money, but get taxed on your entire yearly salary, even though you didn't earn it in that state?
Yeah, that seems like a lot.
That doesn't seem reasonable, does it?
It seems like a lot. Now again, we've steered clear of political territory on our podcast, and we want to still do that. But this is just a reasonableness test on this, I think.
Right.
Yeah.
Well, but California is not the only state that does this kind of thing.
No,
you just mentioned Tennessee,
yeah.
But there's a lot of other taxes that always surprise me. I don't know about you.
Yeah.
And one of them is, in my industry, is called the federal excise tax on a new truck.
Really?
When you buy a truck, you immediately throw down 15% to the federal government.
Just for buying a truck?
Just for buying a truck, a commercial vehicle.
And that's not the sales tax?
That is not the sales tax. That is a federal excise tax. 15%. So you spend $100,000 on a brand new truck. That is not the entire bill.
Is that figured into the cost of the truck, or do you pay that on top of the?
It's on top.
So it's not. So when you go to the dealership to buy a truck, they don't figure in that tax for you?
No. That's something you have to pay on your own.
Right. So I guess you hear about that when you go to buy the rig, right? They're like, oh yeah, by the way, you have to pay. Well,
most people who buy a new truck know that this is coming.
Know it's coming.
They know this is coming. Yeah. So that's a surprising tax.
Yeah.
How about all the? Have you ever noticed your rental car taxes?
I don't rent a car often, but now that you say that, yeah, there's taxes on rental cars.
I mean, the city taxes you.
Right.
There's a fee for the airport that taxes you. Right. And sometimes there's a state tourist fee on the rental car. Hey, you're a tourist.
Oh, a tourist tax?
Tourist tax.
Just for being in the state.
Well, if you're renting a car, they tack that on.
Right.
Another surprise tax is my daughter, we've talked about this, goes to school in Richmond. Richmond has an extra tax on eating out.
Just eating out?
Just eating out.
Oh, what's it called?
Eating
out tax?
Well, yeah, I'm not sure exactly what it's called, but I know it amounts to about 12%.
Wow.
Yeah, it's huge. Eating out is very expensive in Richmond.
So for a long time, you could shop online, and I guess you weren't paying any type of tax.
So we weren't paying sales tax, right?
Sales tax.
Because it's out of state. It was out of state, right?
In the state. But then, so North Carolina started having that little catch-all on your taxes that how much do you think you paid?
Called the use tax.
Yeah, out of state this year. And then you could either claim like a standard tax amount, or you could actually have your receipts and figure the amount of what you bought out of state that year.
But then Amazon, especially which is the main company, they started collecting sales tax everywhere.
Man, that had to really complicate.
Business. Where do you sit? Where do you live?
Where do you live? What's the sales tax? And then getting it back to the
how do you get to report it? Yeah.
Golly, that would be a lot.
Well, going back to the jock tax, it sounds like these guys and gals that travel especially I wonder if California is the only one who has a jock tax. I'm sure there's other states that might have it, but I wonder if their football schedules people avoid playing games in California so they don't have to go there and get taxed on their entire salary.
I wonder. I mean, to me, it would seem like it would discourage games from being played.
Yeah.
I mean, I guess with the NFL schedule, you have to have a certain number of games that are going to come to those stadiums regardless because of the schedule.
Right.
Like you're locked in.
Right. Yeah. But I mean, if you're in this particular conference that never plays a California team, you're golden until the playoffs or the Super Bowl.
Yeah. And if you're on the roster and you're a low earner, I wouldn't want to go. Like I said, just leave me at home.
That's right. That's right. Well, I mean, hopefully it's just a percentage, right?
Yeah.
You get taxed on the percentage.
Right.
But it is an extra burden.
Yeah. Yeah. It's strange. I would think that would work opposite because, and states use this to their advantage, obviously. Like, certain states are going to offer lower taxes in certain areas to attract industry.
Oh, right. Tax breaks.
Right. Tax breaks. We do that in North Carolina, trying to lure industry to the state.
Sure.
You don't want to be known as a high tax state. That's
especially in businesses, right? Yeah, right.
You're trying to lure people in. Yeah, I wonder if they tax like NASCAR drivers when they race in California.
All right, is this the philosophical question? If NASCAR drivers are athletes?
Yeah, and that's hopefully going to be an upcoming episode where we talk about what's sport and what's the game.
I suspect all athletes, all racing people gets taxed. Yeah. Although I wonder which ones. I mean, California must recognize that not all states or not all sports earn money.
Right.
But then are they going to start taxing college football players?
Right, because now
you're making money there.
Oh man, that would be terrible.
Isn't that crazy?
Well, let's say you're on the pro bass tournament.
Yeah, you're doing it. You're paying.
Are you paying a tax if you fish in California?
I bet you are.
How would you keep up with that?
Well, that is a good question. And I mean, I don't know how I don't know how the state keeps up with it. And I don't know. I mean, you and I could figure out, and an athlete could figure out when they're in that state.
Yeah. And
I guess you just report it. You have to, generally, these are all self-reporting things, right?
I don't know.
But then they're going to audit you and say, hey, you're a pro athlete. Let's check your schedule. I mean, they can look right on the schedule, right?
Yeah. It does seem a little odd that you're like, it seems like you're taking advantage of the pro athlete at that point.
Mm-hmm. Right. Because
their high earning status.
Yeah. And they have to go there.
Yeah. To play the game. They can't, especially a star quarterback is not going to be able to say, well, I'm not going. I don't want to pay the tax bill.
Right.
I'm not going to be in the Super Bowl because I don't want to pay the taxes.
Well, I think you and I agree on this one. Unlike the origins of salt, we agree that this is an unreasonable tax on our athletes.
Yeah. I thank you, Ricky, for the topic. It was a good topic that you sent in.
If this is your first time listening or watching, we want to thank you for joining us. If you enjoyed the episode, if you enjoyed how we talk and how we discuss things, would you hit the subscribe button or the like button in the platform you use? And again, you won't get any junk mail from us. Also, if you're that long-time listener or viewer, again, we thank you for your emails. We'll respond.
Yes.
Yeah. And keep them coming. Any surprise taxes that you may have encountered?
Yeah, send them to us. All right. That Don't Sound Right is a production of TDSR Podcast in conjunction with Campbell City Studios. I am your co-host, Cecil. This is your other host, Peter. Together, we do all the production for the podcast sound and audio and video is all done between the two of us.
That's right. We got it.
And AI.
We got a little AI helping us with some sound AI. And some filtering.
Right. Camille makes coffee for us when she is here. Emily has done our graphic design. Ella's done our Instagram. Giorgio has tested our merchandise. Brent is our international brand ambassador. And as always, listener number one is Scott. So until next week, keep talking.
And stay curious.